Am I one?
Yes.
I want to welcome everyone to the Finance Committee meeting of Wednesday, August 28th, 2019 at 9 a.m. And we'll start with the roll call.
Mr. Lear, Mr. Legess, Mr. Washington,
Present.
Mr. Olthoff, Mr. Hess,
Present.
Mr. Byrne,
Present.
Ms. Weber,
Present.
Mr. Payton,
Present.
Ms. Parker, Mr. Kinzinger,
Present.
Mr. Zenz, Ms. Haas, Mr. Swanson, Ms. Zucolo, Mr. Dennell, Mr. Wheeler, Mr. Searay.
Present.
We have a quorum.
Alrighty. Did I have you on? I didn't, did I? Okay. I have no public comment. Is there anyone for public comment this morning? Okay, we have no presentations, I do not believe. So I'll look for a motion and a second to approve the minutes of July 24th, 2019. Mr. Burns, seconded by Mr. Payton. All those in favor say aye. Aye. All opposed? Motion carries. Finance Department, Steve McCarty. Morning, Steve. Thank you. You're 3, huh? Yeah.
See a number. Yep. That's on. Good morning. We'll cover the monthly updates for the miscellaneous taxes and major items that we look at every month. We're still trending positive in just about all of them for the entire year. Sales tax, is still running about break even. So we'll see what the second half of the year, as far as the sales tax year goes here. But all of the other ones are doing well. I did receive a report saying the PPRT estimate for next year, they're projecting an increase of 14% in that. So we'll see. I'm not going to go quite that aggressive with it, but we'll keep watching that, as it's positive right now, as we're looking at projections for next year. But it's a short update here. I know somebody has a specific question. I don't have anything in great detail on any of these at this point.
Sir, would you turn your phone off? I don't care who you are. Is that it?
Well, on that one, unless there's any questions, then I'll move on.
Any questions on the financial report? Looking good. I think every category's up, isn't it?
Just about. I'll move on to cash flow if there's no questions there.
Yeah.
Just a reminder from the board meeting that Chairman Wheeler shared with you that we did pay off the TAW early and save $6,500 of interest. The deadline to pay that back was September 30th. And historically we have paid it in July and September, so we moved it up about a month and a half approximately. And then we also did a highway TAW payback of $1.5 million, and as well as a 3 payroll month. And we're looking at this point that third payroll goes out this week. That 4.3 is ending cash balance will be really close. We're on track for that here. So That's all positive news. We're working on obviously current stuff, the 19 amendment and that 20 budget, and I'm working on updating this, and so we can discuss 2020 here soon, you know, as far as cash flow going forward. So we'll have more on that. We're also working on the tax levy, so there's a lot of information going forward, but so a lot of good news in that regard. And we're current within 30 to 45 days on all accounts payable, so that's also real good news. And I don't know if there's any questions on the cash flow report at this point. Just wanted to remind everybody and identify those on the sheet for the highlights and stuff, and show it in the cash flow statement.
Oh, let me get you here. Here, 10. Okay.
Thank you,
Sarah?
Mr. Chairman. Steve, when is the last time you've been 30 to 45 days with payouts? I mean, it's been years, I know, but
Yeah, probably.
just for the
He
committee's
was
sake,
in high school.
it might have been that
2010,
long.
2011, possibly. I would say my guess would be that without
Yeah.
going back and doing looking at it. It's been a long time.
Thank you, sir, for that information.
Whoops. Okay.
No other questions, and we'll move on. That. Another positive economic indicator, if you will, for the county is the fact that we can have a discussion like this and discuss switching over to a new credit card company. We have tried 2 or 3 times here in the past, and without any luck due to our fiscal position. And so we now have an option through First American Bank, and we qualified into their government program, and it's 0%, as you can see, for any activity that goes on with the card, and then very similar, you know, fees for various things if we happen to, you know, cross over into that. So we wanted to bring the information to you. We have official response from them, and some of the advantages, as we noted at the bottom. Currently, we interact with 4 monthly statements, and we'll go down to 1 statement for all the activity. The lower interest rates that we mentioned, and it appears better customer service. And that was one of the also the main reasons of going. We've had a lot of it's very challenging to get through and discuss things with Chase, to say the least. So, and we also have a contact person with First American Bank, you know, if we need to utilize them as well. So I believe the plan is to convert this as of December 1st. I don't know, Chairman, whether if you have anything else to add to that in the process for this process. You know.
16. Oh, thank you. The thought is start this on 12/1 with the new cards going out, you know, for everybody to use and collect the old ones. There may be a run out of a bill or 2 that goes onto the credit card cycle from the previous cards, but we should be, you know, they've got to change if there's repetitive purchases that they get monthly shipments. I don't know, maybe people put their floor mats on a credit card, it just gets billed there. I don't know how that, you know, what else is on there specifically, but we figure that we may have a little run out in January, but everybody should be using the new cards in January. So we want to give it some time. For the committee's knowledge, when they issued the first card, which was to me, then we had to go in and basically accept the card and then load in every employee to make sure that it would take the number of cards that we wanted. So everybody that has a card, and has since, we've had people get cards in the last few weeks, we had to load them in there. So when you accept the card, it's the $88 enrollment fee. So that popped up, and so we will have an $88 enrollment fee, if you will, even if the committee decides not to do it. I don't see why you would, but I just wanted to let you know. So any approval for this would also include authorizing, I think it was $88 or maybe $98 of the yearly application fee. It's not a yearly fee that's every year, it's just that one time. So we definitely wanted to give time for the rollout, not just go scrambling around trying to collect all the cards, let people know that it's changing on 12/1. And what that process will look like, we'll lay that out between finance and obviously work with the auditor's office and to make sure that everything's tied up, and then Anita and administration.
Anybody else have any questions on it? So we need to get a vote on that?
Do you want approval?
Yeah, we should get approval.
Okay. We need a motion and a second to change the credit card vendor effective December 1st, 2019. Mr. Washington, second by Ms. Secola. And this will be a roll call vote.
Mr. Legess.
Aye.
Mr. Washington.
Aye.
Mr. Hess.
Aye.
Mr. Byrne.
Aye.
Ms. Weber.
Aye.
Mr. Payton.
Aye.
Mr. Kinzinger.
Aye.
Ms. Haas.
Aye.
Mr. Swanson.
Aye.
Ms. Zucolo.
Aye.
Mr. Wheeler.
Aye.
Motion carries.
Okay.
Thank you for that. That'll create it's going to save a lot of work. A lot of the problems that we have is related to the 4 statements. And we send each check in a separate envelope and to them, and they end up getting misapplied about every 3 months. We're always working on it. Then there's fees they got to reverse, and then they try to charge you interest because they double paid one and didn't pay another, and then you got to, so it takes a lot to, to do something that should be straightforward. So this will make it way cleaner with only having one, so they can't misapply payments, to other accounts and stuff, and create a lot more work for us. So we appreciate that. I don't have any other claims at this point. I don't know if there was any other claim. Oops, sorry.
I just realized the motion didn't state that we authorized the $98 or, to pay that.
Oh.
It needs, is that assumed in the motion from the?
Yes,
Oh, okay. I
it
just wanna
is
make
as
sure it
far as
wasn't
I'm
said,
concerned.
But I just didn't want to get the claim hung up without.
Okay. You have no,
I don't
nothing?
have. I don't know if there was any other claim submitted to administration. I don't have any at this point. So.
I don't have any. You have any, Andy? No, nothing?
Okay.
Okay. That's it, huh?
That's all I had for
Wow.
now. We got a lot of information about ready to come your way. But that's what I have today. So.
Okay, great. Any questions for Steve before he leaves? Okay, thank you.
All right.
Good report. Next up, from the administration department, I believe Mike Lynch is gonna speak to us today about the 2020 United Healthcare Renewal Preliminary. Michael?
Good morning.
How are you?
How you been feeling?
Good, doing good.
Happy to hear it.
Thank you.
We've got the renewal. It's come in slightly higher than we wanted it. We were hoping to get something under 5%, but it has come in at 8.5%. And I would say there are 3 reasons behind this. And the first reason, I think Anita included 2 sheets for you guys in your packets. They have a graph in there. And on the left side of the page, you'll see that the first one shows through May of 2019. And if you go down below that total experience period, you've got the current period and you've got the prior period. If you go all the way to the far right of the page, you'll see 2 figures under the claims to premium ratio. And again, just for those who may not remember, that is simply the claims paid against the premium that was taken in, simply. 5 or 6 months ago, you can see that there were periods of time where we were under 80% as an average. But here in the last quarter, if you will, on this page, you'll see that it returned to above 100%. And below that, again, the current period sitting at 82.9 and the prior period at 82.2. If you'll move to the next page through June, there's 4 dots there, and basically we've added June's in there. And unfortunately, you know, that last 4 months averaged around 121%. So we've returned to this above 100% of premium taken in, you know, regarding claims. And at this point, the underwriter has looked at that and looked at the large claims and trended it up accordingly. I mentioned large claims because that went, you'll remember, I think the last finance committee I came to, we talked about a very low number of large claims. Went from 3 at that point in time to now it's at 10. So that's the bad news. The good news is that 5 of those claims are open, meaning ongoing. 5 of them are closed. So we're sitting on top of 5 that were taken into consideration in the underwriting calculations. 3 of those claims happened to have been over $100,000, one of which was at $150,000. You'll remember internally in these fully funded plans, they have what they call a stop loss. If it reaches a certain level, the cost of the claim is written off, basically. It's not charged to the account. So only one of those large claims was written off, and the rest of them counted against it. Another thing that is a negative regarding the Affordable Care Act is that this year, or in the forthcoming year, we have an inclusion of taxes that we didn't have last year. I don't know where many people remember, but President Trump suspended the insurer fee last year as part of his ACA presidential mandate. And this year it is not suspended. It could be, but it hasn't been yet. And the inclusion of those taxes represents about 2.65% of that 8.5%. If you do the math on it, and you look at the premium right now, and 2.65% is about $110,000. And the other half of the story is if you look at the 8.5 without the taxes included, it gets it down to 5.85 without taxation. So our goal here is going to be, it's already gotten out to the marketplace, so we're going after all the insurers for like type policies from other carriers. And in the greatest of senses, we'll work with United Healthcare to whatever degree we have to knock down the cost of the increase. My hope is to get it down. To what degree, I won't know until I see what the numbers are coming in from the marketplace and where, if any, they have any flexibility. And they always want to see what the marketplace says. We're gonna discuss that, and it's part of the process. But after the fact, I think at the end of the day, the 8.5 won't be the number we're looking at. It'll be less than that. To what degree, I can't tell you right now. Last comment that I wanted to make is that this account right now, the desired loss ratio net of the insurer fees from the insurance company is about 86%. So we're running in excess of that, and that's one number. So when I look at that 8.5, even including the taxes, we've not been hurt that badly, but it's not fun. The trend rate that they're using, meaning the medical inflation trend we've talked about before, it's like any other quotient they use. I hear anything from 7 to 9.5% in the marketplace. They're using 6.8 in this renewal. So it's under where I've heard some of the numbers at, but we'll see how that tests the time. So, and I think that's it.
Any questions for Mike?
Very good. Thank you.
Thank you, Michael.
Thank you.
Next up is Treasurer's Office, Nick Africano, and while Nick's coming up, we'll need a motion to combine and approve the County Treasurer's Report, the County Collector's Report, And the monthly resolutions for all of September, for all of 2019, for those 3 months. Mr. Hess with a motion, Mr. Payton with a second. All in favor say aye. All opposed? Motion carries. Mr. Nick,
Good morning, everyone.
you come empty-handed.
I am empty-handed. No one's paying taxes, Mike.
Oh, my God.
Now, just a couple quick housekeeping items. Taxes are due by September 5th. That's the second installment. Mobile homes is due by the 20th. It seems like people are paying a little bit earlier this year than last year. We're running ahead of schedule. And one thing I did want to mention, we were able to lock up some money with First American for 30-day increments. And because of the rate that we were able to get, we're going to be over, looks like over $300,000 in interest money that we'll make this year. So we're pretty happy about that. So it was $240,000 through the end of July, so we won't know here till the end of August. Another thing to mention is September 10th is the trustee auction at the Quality Inn Hotel. And a lot of people are confused. You know, we have a tax sale, which is where we're selling delinquent taxes.
Right.
The auction at Quality Inn is where taxes have been delinquent for 3 years or so, and the trustee has taken deed, and then we're auctioning those properties off to recoup some funds. I guess that's it, except to say it's really good to see Mr. Washington back here.
What about me?
You and Mike. 6. Yep.
Any questions for Nick? I was just wondering, how is the process where they can pay any amount they want, anytime they want, is that being utilized?
It is being utilized. It's really awesome, and we're gonna start taking payments in November for next year. Now those payments will be predicated upon this year's bill, so it could fluctuate at some point, but it's getting more and more popular. I think one of the things this year that's also helped is this was the first year you could pay your mobile home taxes online, and a lot of people have done that. So you can notice the foot traffic is a little bit more spread out, a little bit more, a little easier to predict.
Good.
So it's good. I didn't say that, Roger.
Anybody else have any questions for Nick or comments? Okay, Nick, thank you. Next up, we have the Sheriff's Department, Sheriff Downey. This is going smoothly. Yeah, I mean, I can handle a meeting, can't I? Do we have one of those he's passing out? Mike, I'll need one up here. Yeah, you got one. Okay, thank you. Okay, good. Thank you.
Good morning.
Morning.
What I handed you, we'll talk about. It's the second item on the agenda. Get so much here. I've killed a few trees. All right. Basically, to kind of go over the report, if you notice, the report is up on the screen as well. This should have been sent out, and I believe it was, to every county board member prior to the Criminal Justice Committee meeting. Just a couple things to bring to your attention. The average that we have of our inmates and detainees, the biggest increases that we have are with the U.S. Marshal Service and our local inmates. So far in 2019, we're averaging just around 227 U.S. Marshals per day, and our locals are at 267. ICE has remained fairly steady at around 150, right? It's 151, but it's floats around 150 or so. And if you look at the revenue, and I will just caution, as I've done in the past, if you look back at the bottom under revenue, under bed rentals, and you see the housing or the bed rentals in 2016 and 2017, fiscal year 17 was 8,473,000. In 17, or rather in fiscal year 18, it was 10,573,000, so slightly over a $2 million jump. And projected out in fiscal year 19 will be potentially another close to $2 million jump. I can pretty much guarantee that fiscal year 20, you will not see a $2 million jump. So obviously, that number does level off at some point. However, they are good, and we're pleased with how things are going. We do have another inspection of our medical department coming up in September, the National Commission on Correctional Healthcare, NCCHC. We are accredited, one of few jails in Illinois who are accredited, and we do have an outstanding medical department that I'm sure will pass this inspection and accreditation. So, questions on that?
Mr. Wheeler?
Oh, no, you changed it. I'm sorry. I was wondering if you could break it out so we could see it a little bit. Never mind.
I guess we're okay. Vehicles.
What's that?
No
Vehicles.
question. Go to vehicles.
Okay. So we gave this information to the Criminal Justice Committee regarding vehicles. And I can just tell you that in spite of the what may have been reported as $800,000 worth of vehicles for the sheriff's office, the total vehicle amount that we're asking for is actually $553,488. The additional cost is for equipment for Tahoes and equipment for Dodge trucks. There are some of those Dodge trucks that we don't need computers and cameras for because our investigators are not out making traffic stops. They're responding to calls that require their investigators be on scene. So that's why you don't see computers and cameras for each of those that we are purchasing. We have tried to get into a cycle where we are purchasing trucks so that, or purchasing vehicles so that our trade-in value will increase significantly. As it is now, you know, we're probably getting anywhere from $1,000 to $1,500 for a trade because of the high mileage and the wear and tear. As I reported to the Criminal Justice Committee, our maintenance cost right now in this fiscal year is over I think it's 140,000, projected out to be about 150 or 160,000 by the end of the budget year. And the majority of reason why is because those 2013s are out of warranty, and a new transmission is about $3,000 a pop. So when we move cars and when we trade them in, if we can keep them under that 5-year, 100,000-mile warranty, they are still under warranty. So you're not spending that additional money for cost after that 5-year, 100,000-mile limit that is set. So I'd be more than happy to take any questions. If you look on the back real quick, those are the 3 quotes that we received from local banks. And you know, obviously that decision were it to go forward is certainly up to you, but you have that information in front of you. The other issue that is on the back are the cost for the maintenance trucks. There is one of the Dodge Ram trucks at $25,275, and a Ford F-250. That $28,000 is an estimate because the state bid contract we have not received yet. It was right around 24.5 or 25 last year. So we are estimating about 20% increase in that contract. That could be less and more than likely will be, but we estimated it at 28 just to be safe.
Mr. Washington.
On the list of requests, the fourth item down, the Dodge Ram truck,
Yes.
we've got a listing here of
Are you looking at the one that was provided in your packet?
yeah,
Okay, that is not accurate.
that's what I wanted to know.
Yeah. Yeah, this is an updated one after some additional information became available. Yes.
Mr. Wheeler,
Thank you, Mr.
Chairman
Chairman.
Wheeler.
I just wanted to at least, call out a couple of things. First of all, the two of these Dodge Rams are replacing the Metro detail Tahoes, and those are, I believe, well over 100,000 miles. Those
Yeah,
are,
one's a 2012 and one's a 2013. The reason that we have that 2012 still is because it's got striping on it that says Metro.
Yeah.
So,
and so these are replacing those.
Yes.
It's important that we didn't do those, replace the vehicles for years, and that's why we got into that black hole of cost on maintenance. So we've had 2 years of replacing vehicles. This will be the third year, and then we're on plan to be able to drive full value, or at least maximize value on trade-ins. Before they lose their warranty, you get a lot higher resale price, and that money's gonna go right back into purchasing new vehicles on the program. So these numbers will come down if you stay on the program. If you go off of it, then all of a sudden you get $6 grand or $7 grand at auction. And it's a very precipitous slide down that path. So I wanted to note that, as well as the maintenance truck is outside of the sheriff's request. That is something we're doing like as a building and grounds thing, if you will. I don't know if the people that were here remember when we put a lot of money in that plow getting it fixed, because you had to have a plow. You can't not have a plow to go do our parking lots and things. So we knew we needed a new truck anyway. We just waited until we were financially able to do so.
and that's a great point. And the both of those trucks in maintenance, the plow and the pickup, are both from the year 2000. So they're 19 years old.
I guess I'm stressing this makes financial sense. This isn't like we have money and now let's go spend it all. We've waited on so much.
Well, and
we didn't
unlike
have any.
unlike what some people may have read, you're not coming up with $800,000 in 1 year.
No.
This is going to be spread out over time with a lease purchase.
Thank you.
Mr. Hess?
Thank you, Chairman. We're in the discussion, but I'll go ahead and make a motion. We approve this so we can get back in the discussion.
Okay, Mr. Hess is gonna make a motion for Mr. Swanson with a second. So the motion is for the vehicle purchases at this price?
That would be the total,
That's
unless,
the total.
unless that estimate number changes.
Okay.
And I would only see that changing less.
Total price of $808,918, depending on the state bid.
Yeah, the state bid contract.
State bid contract.
Follow up on that then is the reason the Ford F-250 is for the plow.
Yes.
The only reason we're spending more money because it has
Yes.
to be beefed up for the plow. correct?
Yeah, that's an F-250 as opposed to a
Half
1500 Dodge or a $2,500 $2,500 Dodge.
Mr. Sierra, what, 10? Good.
Thank you, Mr. Chairman. So I guess our next piece would be, are we gonna finance this over a 4-year period or a 3-year period with, municipal bank is 2.25 or another 25.25% for the 4 years. So, you know, I just want to know what the committee's thoughts are on for the financing of this 808 over a 3-year period or a 4-year period.
I don't know. 4 years.
Steve's
Steve?
right behind you.
Yeah.
One other question that I had for the committee, it says FY 20, is this the plug-in to start after the, there's one coming off in July, I believe is the next cycle, so I know when to plug this in, when it'll adjust, for either, 19, 20, and the information I'm working on right now, just asking for clarity on what the committee was looking at, what the intent was. And I have not seen those quotes, I'm sorry,
So-
I'm not
Here,
sure.
Steve, I have a
what
copy
you guys
for
are
you
looking
too.
at.
So people know what he means by coming off is we're just ending one lease. For people who don't know what
Right.
that means, it
Yes.
means we're just ending one lease. So he's asking, do we begin the new one at that point? Or are we gonna have overlap, not necessarily double payments because it's not on the same vehicle, but as far as budgeting purposes?
If I could answer that, and the only issue I see from our standpoint is, and just a little bit of history on why the Dodge trucks. If you look at the price of a Dodge truck compared to the Tahoes, I mean, you're talking almost $10,000 a vehicle. Dodge is trying to get more into the police market. They offer Chargers. I think there's some Durangos out there. Dodge is trying to get more into the police market. And the only issue that would affect what Steve is saying is we have to order the Dodges by September 9th, I believe, if we can get them at this price.
What was that date?
September 9th, which I think might be before the county board meeting, I'm not sure.
It will all be 2020, correct?
Yes.
Mr. Swanson, let me see here, 7. Okay, Joe, go ahead.
Thanks, Mr. Chairman. Does this price include lettering the trucks?
No, but that's minimal. We'll pay for that out of our budget.
Okay.
And that would only be on the 11 Tahoes.
Yeah, the Tahoes.
Steve?
For the 3 or 4 year question, usually you want to stick to the life cycle of the vehicle, as close to the life cycle. That's why we've been staying at 3 year, and what the sheriff just shared with, the wear and tear that happens. We could get into a situation that you're paying the 4th year and a lot of them aren't functioning anymore. So it's probably better to stay at a 3 year cycle because the majority of these are the squad use vehicles. Do you agree with that, Sheriff, as far as?
Well, I would say from a trade-in standpoint, yes, but maybe from an affordability standpoint, because they're 5-year, 100,000 miles in that 4th year, you should still have some warranty left in them. But that's certainly up to the committee.
Are they crossing 100,000 in the 4th year?
Some, depending on where they're assigned. I mean, we try to limit the miles on as much as we can, but sometimes that's not possible.
Any other questions? Mr. Kensinger is 10.
Related to Mr. Sirois's comment, it appears to me that it's a decision. Related to Mr. Sirois's comment, it appears to me that it's a decision based on the cash flow of the county. And obviously 3 years better than 4 year, but I'm not certain this committee can make that decision without some recommendations from someone.
Mr. Wheeler?
In the estimates, it fits into our cash flow model because we are running surpluses to get out of debt and to get ahead, so we don't have to borrow money. So it's not eating into resources that we need elsewhere, I guess you could say. So if we do have to spend this a little bit each year, I know that we actually can handle that. on a cash flow basis, going forward
The 3-year?
for the 3, yeah.
Does the 3-year and the interest rate and the institution need to be in the motion?
I believe so. You know, it would have, in hindsight, we should have probably included one other institution that was, who we do a lot of business with currently, but it would be unfair to invite them in now that they know everybody's
Oh,
rate.
absolutely.
So, you know, we probably should vote on the 3 we have in front of us.
Okay.
Yeah.
Who's that?
I'll amend my motion
To include,
to include municipal bank for 3 years at 2.25%.
okay. Second, Joe? You were the second on the motion. Mr. Sears?
Thank you, Mr. Chairman. So, Steve, I guess this question is for you, Steve, is when's the next cycle of vehicles that we just leased come up? So I'm looking 3-4 years ahead. Are we gonna overlap again? Or are we gonna just be right in line where we're renewing every 3 or every 4? You know, that's the best way to do it, but not to overlap, you know what I mean?
Maybe I could, if we have the time, I'd make a recommendation. I could put information together and bring it back to the next committee next month if we still have some time, and then we could properly analyze it, because I'm asking stuff off the top of my head right now that I don't have. I remember July because I was working on next year's capital development, you know, and I was running estimates on with this potential, but timing, you know, does change everything if we want to take a look at that.
It would be nice to have it timed out where
And we would like to
rolling.
do that, but our 13s are costing us more money than it is to buy them at this point, to buy new ones. I mean, that's the problem. You're still spending the money.
Yeah.
So.
In a perfect world, it would be nice to get them right,
Well,
falling in line.
and that's right. And that's, I mean, I think in the perfect world, I think you ultimately figure out we don't go every 3, you know, one every year, for 3 years,
Yeah.
you maybe skip a year. And I think that's probably where we're heading.
And I know transportation is not a perfect world.
Right, exactly, exactly.
Mr. Wheeler?
Just one other comment. I just want to make sure everybody knows, these are pursuit vehicles. These aren't the vehicles that you would see like on the floor somewhere. You know, they don't have, you know, curb scrapers and fuzzy dice. I mean, yeah, they're the police package. I mean, there is a misconception out there.
The
That,
Tahoes are pursuit rated.
Yeah.
The Dodge trucks are not.
right.
So, and those wouldn't be involved in a pursuit anyway.
Mr. Hess?
At the Criminal Justice Committee, we discussed maintenance and everything, and it was said at the Criminal Justice, the $140,000 is 4 vehicles.
Yeah.
And
Yeah.
if we, you know, we're projecting out another 15, 20,000 by the
Yeah.
end of the year, that's another half a vehicle, so.
True.
You're not gonna get away from all that maintenance costs. You're still gonna have maintenance.
But you're gonna have
Still gonna have
maintenance,
some,
but
sure.
Still gonna have some.
Sure.
Any other questions? Ready for a vote? We have a motion by Mr. Hess, seconded by Mr. Swanson, and what the motion states. And we'll have a roll call vote.
Mr. Legess?
Aye.
Mr. Washington?
Aye.
Mr. Hess?
Aye.
Mr. Byrne?
Aye.
Ms. Weber?
Aye.
Mr. Payton?
Aye.
Mr. Kinzinger?
Aye.
Ms. Haas?
Aye.
Mr. Swanson?
Aye.
Ms. Zucolo?
Aye.
Mr. Wheeler? Motion carries.
Okay, that's it, Michael?
That's all I got.
Thank you very much.
Thank you, everybody.
Next, we have Jake Lee, the Auditor's Office, monthly claims. Everybody off? What's all this all about? All this crap. I wanted to get out of here early. Morning, Jake. Sit out here. Thank you. Okay. Go ahead, anytime you're ready.
All right. Well, good morning, Mr. Chairman. Good morning, everyone. Before I give a couple of comments on the claims report, I just wanted to let everyone know we do have another event regarding All the Queen's Horses, which is the documentary that was about the Dixon, Illinois fraud, which is the largest fraud case in United States history. It's on September 19th. It's a Thursday, I believe, at the Kankakee Public Library. We'll start at 6 and at 8, and it'll be a good time. We've had 3 so far, and good response, so you're more than welcome to attend and learn about some of the red flags and some of the things that could happen if we don't have some of the protections that were not present in Dixon. So the claims report was emailed on Friday, I do believe. We do have the standard language, as you do know, and the items, the content of the report is just cash disbursements, which is also available on the auditor's website via the online checkbook. So you're free to go there as well. So with that, nothing other than what has already been communicated from my office, and I'll take any questions if there are any.
Any questions? We will need a motion and a second to approve the monthly claims. Mr. Chairman Wheeler, second. Mr. Payton. This will be a roll call vote.
Mr. Lejes?
Aye.
Mr. Washington?
Aye.
Mr. Hess?
Aye.
Mr. Byrne?
Aye.
Ms. Weber?
Aye.
Mr. Payton?
Aye.
Mr. Kinzinger?
Aye.
Ms. Haas? Mr. Swanson?
Aye.
Ms. DeColo?
Aye.
Mr. Wheeler?
Aye.
Motion carries.
Okay, thank you.
Thank you, Mr. Chairman. Thank you, everyone.
Thank you. Have a good day.
You as well.
Okay, we're gonna move on to other business, and the first item, chairs at the Kankakee County Courthouse. And Chairman Wheeler want to speak on this, or who wants to speak on it?
Briefly, it was recommended by Building and Grounds. Chief Judge asked for some new chairs in the jury room. They're about as old as the ones we're sitting in. So I think it was a jury, it might have been jury assembly, but anyway, they needed the chairs. He requested it. We approved it, sent it here just for the final blessing. I believe it was around $1,000 for the chairs.
Total of 1,000, roughly?
Yeah, it was a small amount.
Okay. So we will need a motion and a second to purchase some chairs for the courthouse jury room. Mr. Payton? Mr. Byrne, second. This will be a roll call. Spending some money.
Mr. Lejes?
Aye.
Mr. Washington?
Aye.
Mr. Hess?
Aye.
Mr. Byrne?
Aye.
Ms. Weber?
Aye.
Mr. Payton?
Aye.
Mr. Kinzinger? Ms. Haas? Mr. Swanson?
Aye.
Ms. DeColo? Mr. Wheeler?
Aye.
Motion carries.
Next up, we have a hazard mitigation plan grant opportunity. And Dell, you can speak on this? Okay, thank you. Either one.
Good morning. Illinois Department of Natural Resources and FEMA have both reviewed our current hazard mitigation plan.
Oh, I got it on. Oh, up, yeah.
Is that better? All right. All right, let me start over. Illinois Department of...
Moving too fast.
Oh, sorry. Illinois Department of Natural Resources and FEMA have both reviewed our current hazard mitigation plan and have recommend some extensive changes to that plan. And to accomplish this, I'm likely looking for a consultant to help us out. The DNR does have a grant opportunity that will pay for 75% of the cost, and that becomes available October 1st for us to apply for it. The 25% can be in-kind services from my staff. So what I'm asking for today is permission to go ahead and apply for that grant and see if we get it.
Questions, Mr. Kinzinger?
is this something that they recommend we do or require us to do?
Some of it is a requirement. There are some pretty extensive changes. They want more thorough analysis of our structures in the floodplain, which is going to require drive-bys and inventories. And then they want us to analyze those compared to the repetitive loss and their insurance claims. Some of that is required by the FEMA regulations.
Make the motion.
Okay, Mr. Washington's gonna make a motion to apply for the grant.
Yes.
Second by Mr. Colo. Now we'll have some more discussion if there is any.
If we actually receive the grant, obviously we will be coming back to you.
Okay. Any other questions? This is a roll call vote.
Mr. Lejes?
Aye.
Mr. Washington?
Aye.
Mr. Hess?
Aye.
Mr. Byrne?
Aye.
Ms. Weber? Aye. Mr. Payton?
Aye.
Mr. Kinzinger?
Aye.
Ms. Haas? Mr. Swanson?
Aye.
Ms. Zucolo? Mr. Wheeler?
Aye.
Motion carries.
That's it?
I've got one more.
Oh, you got the aerial?
Yes.
Okay, aerial photography.
Every 5 years, the GIS department obtains new aerial photography of the entire county. Our last flyover was in 2015, so we'll be looking at doing another flyover in spring of 2020. In your packet should be a RFP, request for proposals, that we intend to be sending out in about October or November to start lining up a vendor for this project. So today I'm asking for permission to, and approval of that RFP and to go ahead and send it out. It appears that we are looking at, there's 4 different options in the RFP. We currently have 6-inch pixels on our aerial photography, which we could certainly do again, and that would be a low-end option, running somewhere between about $60,000 and $100,000. Or we can move up to 3-inch pixels, which would be twice the resolution, for not a lot more money. We're looking at probably around $150,000 for that. And there are some other options here for oblique imagery. I don't know if you've ever seen that, but basically it takes the aerial photography and drapes it over a 3D model of buildings, so you can actually see the side image of all the buildings. That would be a higher end option, so we're going to be asking for quotes on all of these options and see what we can afford and which way we would go. It appears that based on current discussions that the full 3-inch pixels with the oblique imagery would cost no more than $240,000.
Mr., you want to get a motion first? Before Mr. Hess tells us we need to get a motion. Okay, we have a motion by Mr. Kinzinger, second by Mr. Washington, to go out for RFP in the 3 different options. Is that
4.
4 different options, and they'll bring it back after they get the proposals. Mr. Wheeler, Chairman Wheeler.
Thank you. Just, there is an opportunity maybe to cover some of this cost with 911 having to do some remapping, if you will.
Yes, thank you, yes. The NG 911, I don't know if you're familiar with that. It's the next generation 911 system. It's a mandate by the state to bring the 911 systems up to a more modern platform. Because of that, they already offered money to make, to basically clean our data to make it compatible. I haven't heard if we've gotten that grant yet. That's being done by Tammy Peterson in 911. But we also hear, though, that they've opened up money that will be available somewhere in around October for new aerial photography as well. So we will, if that occurs, we will be applying for that grant, and that may offset some of this cost. It's too early for us to know exactly what kind of pixels they'd be paying for or what kind of quality, so we'll see how that works out.
Okay. The other thing is that this overlapping, or whatever it's called, the one that gives you the side view, the 360.
Yes.
It's something that actually public safety would like to be able to see, so you're able to zoom in on a building, a floor of something.
I would believe so. We did have a demonstration of it. Representatives from emergency services couldn't make that meeting. We are planning to have another one next month to showcase that. But I would believe that for their planning purposes, or just to see what a building looks like before they get there, would be invaluable to them. You'd be able to see what exits you have, what entrances, if there's a fence in the way. I would think that would be something that they would definitely want.
Thank you.
Any other questions? Okay, we have a motion and a second. We'll do a roll call vote.
Mr. Lejes?
Aye.
Mr. Washington?
Aye.
Mr. Hess?
Aye.
Mr. Byrne?
Aye.
Ms. Weber?
Aye.
Mr. Payton?
Aye.
Mr. Kinzinger? Ms. Haas? Mr. Swanson? Ms. DeColo? Mr. Wheeler? Motion carries.
Thank you, Dale. Next up, Kankakee River Valley Enterprise Zone Service Agreement. Who's speaking to that? Oh, we have a gentleman here. That was quick. Good.
Jury's out of the gentleman part.
All right.
So on August 6th, I'm sorry.
Go ahead.
Mike. On August 6th, the River Valley Enterprise Zone Board met and discussed an expenditure on behalf of one of the jurisdictions. And I'm going to kind of go through the whole kind of how this works. So the Enterprise Zone collects building materials exemption certificates applications with subsequent fees. The fees are capped under statute, but we as the county collect the fees for all of the jurisdictions. We keep it in our in a sub fund in our general fund, and we then administer those funds on behalf of the jurisdictions. As those come in, if there's a project in Kankakee or a project in the county, we collect those fees. We, as the planning department staff, administer the program, but the chief elected officials from the jurisdictions have put together a policy that they follow for the expenditure of those funds for projects. We've utilized those funds for the Route 50 corridor, utilized those funds actually for a portion of my salary, and currently the city of Kankakee has requested some of those funds for a two-part project, which is a lighting design at the riverfront bridges on the three bridges, so that's Washington, Schuyler, and the Railroad Bridge, and then a subsequent website, landing page, and marketing outreach effort for the redevelopment of the riverfront. So on August 6th, the city of Kankakee and their consultant presented the project. The board, which is made up of the chief elected officials, decided to expend $30,000 on behalf of that project, which was proposed to us at $37,000. So the general consensus there was the city would have a little bit of skin in the game. This has a regional benefit. Having improvements along the Kankakee River. The Kankakee River is a very valuable asset to the county, so we have a big regional benefit there. But expending some of those funds for that project. As the holder of the funds, we went to planning and zoning to discuss this project. We now have the service agreement. We got the service agreement actually the morning of planning and zoning. But we're looking for authorization for the chairman to execute the service agreement, very similar to the one we did on Route 50 with Hitchcock Design. So the county would be as the fiduciary agent, would be the one holding the contract with Hitchcock, and these funds would be for this project specifically would be the uplighting and lighting design for the three bridges over the Kankakee River.
Any questions? Mr. Wheeler?
And just to clarify, this isn't general fund money. This is money collected from businesses who have applied for projects in the enterprise zone.
Yeah.
So it's not our general fund paying for any of this. It's for the enterprise zone. It's very important to know it's pass through. We're just holding the money for the enterprise zone. So.
Yeah, we account for these funds in it's not our general fund, but in one of the accounts the county holds is where these funds are held. I guess I should say there's $273,000 bank balance was presented at the enterprise zone board meeting. We've got some existing obligations surrounding that, and that was why the board decided to put the 30 there. It will be a check from the county, but it is from this special fund created under the Illinois statute, Illinois combined statutes.
Let's get a motion first and a second. Motion by Mr. Kinzinger, second, Mr. Swanson. Okay, further discussion. Go ahead, Ron. Oh, you want to make a motion, okay. Any other questions about this service agreement? Okay, roll call.
Mr. Legess?
Aye.
Mr. Washington?
Aye.
Mr. Hess?
Aye.
Mr. Byrne?
Aye.
Ms. Weber?
Aye.
Mr. Payton?
Aye.
Mr. Kinzinger?
Aye.
Ms. Haas? Mr. Swanson?
Aye.
Ms. DeColo? Mr. Wheeler?
Aye.
Motion carries.
Under old business, new business, cannabis sales tax ordinance. Andy, you'll probably want to talk on this.
What do you mean by that? Far out, man. Hey, basically, this is a step that we have to take to be able to collect our portion of a sales tax if a municipality has a dispensary, which, you know, there is activity on that front with municipalities, people looking around. So I put the ordinance in there. It's a sample ordinance from UCCI, kind of to show you how it looks. But basically, we have to decide what our rate is. In the final page, I put in highlighted in yellow basically what those numbers are. But we can only go up to 3.75% for the unincorporated areas of the county. And then if it's in the municipality, we would get 0.75% of the gross receipts of sales in a non-home rule county. So do we want to have the maximum in both areas to collect on the tax? We haven't decided yet if we are going to do it in the county. That's something that'll come back to the county full board once we have all of the, you know, that goes through ZBA and the PZA committee. We'll have a decision to say, do we want to allow it at all in the unincorporated areas of the county? That's something that is yet to be fully decided. But if we do, we need to have those zoning regulations. But this would be, if we do allow it, what is the tax rate? So that was kind of cumbersome to explain it that way, but we're kind of doing one step before the other one's done. But this has to be done by the end of September. That's why we have to have this codified, or we have to wait a full year on tax revenue.
Oh, okay.
So I would have waited, but we have to get something down now. If somebody happens to do something in, say, Bradley or Kankakee or Bourbonnais, we would lose out on that year of taxes if we didn't have this done by September.
So we need to have it ready for the September board meeting.
Exactly. That's why I brought it here.
Well, let's get a motion and a second first. Mr. Washington with a motion, Mr. Byrne with a second. Now, and that motion would include the 0.25 and the 3.75.
Yeah, it would be the
most we
it'd be
can.
3.75 for the unincorporated areas and
And-
0.75 for the municipal
75. Okay.
areas.
Right. Okay. Now, any other discussion on that, Mr. Byrne? Let me get you here, Jim. You're 11.
11. I make a proposal that we do the max 3.75 for the unincorporated areas.
Include and the 0.75.
75 for municipalities.
You'll include that in the motion.
Yes.
Okay. Any other discussion? Okay, roll call.
Mr. Legess?
Aye.
Mr. Washington?
Aye.
Mr. Hess?
Aye.
Mr. Byrne?
Aye.
Ms. Weber?
Aye.
Mr. Payton?
Aye.
Mr. Kinzinger?
Aye.
Ms. Haas? Mr. Swanson?
Aye.
Ms. DeColo?
Aye.
Mr. Wheeler?
Aye.
Motion carries.
Don't leave before you sign everything. I'll sign this one. Great. Thank you. I guess I gotta sign those ones back there. All right, any other old business or new business? Mr. Hess,
I'll make a motion to adjourn.
you've been trained well. Who was your mentor? Mr. Hess with a motion, second. Mr. Washington, and I reiterate, George, it's nice to have you back. I actually got tired of looking at the screen, you're ugly. Oh. Okay, we have a motion and a second. All in favor of adjournment, say aye.
Aye.
Motion carries. We are adjourned, and thank you for your cooperation today.